the expectation? What is the ask in the context of the new opportunities? You know, there's ask for the government to support deep tech, for instance. There is expectation that the FAME 3 policy will perhaps get an extension in this budget. You know, between R&D as well as these new areas of opportunity, what is it that you expect the government to do?
So, Shereen, first of all, I think it's a great initiative that they've allocated this amount of budget for innovation and research areas. In fact, they had invited some of us for a discussion and brainstorming on this particular area. And I think the basic discussion was around how to structure investments and how should the government participate. And I think other than the fact that there are specific sectors that need to be looked at, more from the long-term perspective. In the short term, there is a lot of risk in those sectors, and therefore the government has to play a very active role. And they can actually work through a PPP model. And I think some of the sectors like space tech, EVs, and we actually gave them some examples around, areas that need very high capital expenditure. For example, batteries, the cells today are imported from China. And if you want to set up a facility in India, you will need a minimum $500 million kind of investment. Now, usually a private entity may not be able to make those kinds of investments. If the government actually created structures where, they, put in the initial capital and also took a first loss kind of an approach, encouraging more participation from private entities and also giving tax benefits for a longer period of time, you will see substantial interest in investment in those areas. So I think this is a great initiative, but it should be executed well.
Speaking of execution, Alok, and we're seeing different allocations coming in across different sectors. For instance, under METI, we've seen the government roll out the AI program where you have 3 AI centers of excellence, 3,000 crore rupees of funding for AI startups. There's the AI Ignition Grant program. Then you've got a separate semiconductor policy that the government is taking forward. There is the FAME policy as well. So there's a lot that's actually going on. But what do you believe needs to be done in order for us to be able to tie all of this together? And is there an expectation, to Vikram's point, that the government should actually step in and bear some of the risk in some of these new areas? Do you believe that that is a realistic ask, given the many priorities and fiscal constraints that the government has?
Yeah. So, Shereen, I think one issue you raise is regarding consolidation of these initiatives and hence making sure that the needle moves. And I think that's a fair point. I think the government money should get directed in areas where there is national interest, right? So we can't spread it too thinly. And in my mind, there are 2 kind of key filters or criteria on where that holds true. One is sectors where there is a strategic need for us to be there, right? Issues that are of national security, export security. I think clearly those are areas which will require more domestic investment to happen. There's no need in my mind why government should take first loss. In a manufacturing-oriented business, PLI is an established mechanism of promoting manufacturing because the concept risk isn't there.
Yeah.
But in certain areas where there is concept risk and innovation needs to be triggered, there perhaps the fund-of-fund route, which has been used earlier effectively, is the appropriate route to go. I think the second category is promoting ventures in areas that will lead to extensive job creation. And to me, the vast swath of what's happening in the startup space in manufacturing is interesting. I think tourism is an interesting space. I think channeling investments into that area, startups, can lead to actually job creation, which we as a country will need a ton of over the next 5 to 10 years. So really, in my mind, those are the 2 big buckets of where public money should get channeled. Honestly, in my mind, generic deep tech, SaaS, consumer internet, there is enough venture capital and private equity money in those areas. I don't see a market here there which justifies using public money.
Absolutely. Srini, let's address the larger issue of the reforms that one was expecting, backed by the recommendations that came in from the committee headed by the former SEBI chief M. Damodaran. It's been 2 years now. We don't know whether, this budget will be the budget where some of those recommendations will be taken forward or not. Essentially, the thrust of those recommendations was parity, a level playing field, ease of doing business, and so on and so forth. One, I want you to address that issue, and do you believe that we are likely, on the back of the conversations that you've had so far, do you believe that we're likely to move forward down that path? And my second question, and I will throw this open to the panel, something that, for instance, Amitabh Kant has been saying for very, very long, and of course all of you have been saying it as well, unlocking the domestic pools of capital, whether it is family offices, it is pension funds, it is insurance companies, how do you attract that capital into the startup space? What more needs to be done to ensure that happens? Srini, on both those counts, what's the realistic expectation?
I think it's, I'm glad that you brought up these two, and these were one of the two key thrust points on the basis of which we held our discussions in the ministry. The first was with regard to level playing field. As I mentioned earlier, the majority of the private equity capital, which is classified as private equity, actually comes into the country as an FDI or an FPI. Today, we have a situation where the only mechanism of pooling capital in India, whether from families or otherwise, is the AIF regulation. And at this point in time, any investments by the AIF has a lot of gray areas from a taxation point of view. So the first ask that we have asked is, just like an FPI, where all the assets owned by an FPI, and that tends to be only securities, it is very clearly clarified under the Act that these are securities, and therefore they will be taxed either only as short-term or long-term capital gains. This is a very simple and straightforward ask, which gives us a great level playing field with foreign investors. That's the first part. The second, of course, is rationalization on capital gains tax. At this point in time, there are so many categories of capital gains tax. We've asked for a broader rationalization, and we felt that on both these accounts, the government had an open discussion with us, and they were receptive to the ideas. To the point with regard to domestic capital formation, we had made some very specific recommendation in that aspect. I'll give you some data points on this, Shereen, which is relevant. The largest pools of organized capital in India are with the life insurance companies, employees' provident funds, and pension funds. Today, these pools of capital are permitted to invest 5% of their assets into alternative investment funds. It could be any strategy. It could be infrastructure, startups, venture, whatever it may be. They are, and that number, that 5% number aggregates to nearly 3.5 lakh crores. And they are seriously underinvested in terms of utilizing even the existing limits. Now, they may not be investing it for a variety of reasons. It could be lack of understanding or poor past experience or whatever it may be. But it is important that we are able to channelize this, give them the comfort to come into these areas. So what we have suggested is that the finance minister in her 2022 budget had talked about a 1 lakh crore fund of funds corpus for various purposes, and as my colleague and friend indicated, national priorities. We suggested that out of this 3 lakh crore of underinvested capital, maybe the government can recommend that they can take 1/3 of that, say 1 lakh crores, put it into a sort of a fund of fund structure, and that fund of fund can then be managed by maybe NIF or SBI, and allocate that capital across other fund managers in different strategies. It could be startups, it could be any of these areas that we discussed earlier in the show, as well as in infrastructure. Because at the end of the day, if they need pension and insurance companies, they need annuity income. So there has to be something that goes towards infrastructure, which gives you annuity income, and other which is risk capital, which then helps these investors and pensioners also to capture the entrepreneurial dynamism of the domestic market.
Well, those are very specific recommendations that have come in there from IVCA. Let's see whether they're taken forward. Alok and Vikram, very quickly, we're at the end of our time, but Alok, I'll come to you now. Just taking forward from what we heard there from Srini, that, there's really no point perhaps in enhancing limits at this point in time, because you haven't even been able to utilize the money that is currently technically available to you, or is perhaps open to you for deployment. Now, if there was one priority, one single wish that you believe the finance minister delivers on in 2024 in this budget, what would that be?
So I think I see the money that lying with insurance companies and so on as their prerogative to invest. I do think there is a separate rationale for the government, and maybe through the 1 lakh crore that has been set aside, to pursue some of these specific sectors of priority. So those are two different pools with two different objectives of deployment, and I hope that that gets on the ground with the focus around the national priorities that we discussed earlier.
Vikram, final word from you.
So I just wanted to add to, I think this is a very important point you mentioned about the domestic pools of capital creation. Srini mentioned that very well. But I just want to add to that, I think not only we need to encourage the capital that has already entered into this space, but new pools of capital that can be created. In fact, endowment funds in India, we've seen it started now originating across different IITs and IIMs and other places. I think there is a lot that can be done there to encourage various endowment funds to also invest in AIFs. And over and above, I think the banks have already started investing in AIFs, but I think recently there was some confusion based on the regulations that came up from RBI, and I think those are not clearly articulated well, and I think that some confusion is still there. So things like those, I think we need to address on priority.
Well, some are matters with the regulator, but of course tax is the matter that the finance minister can deal with. You've heard the recommendations that have come in from industry. Will 2024 be the year that at least some of these issues that have been perennially on the table as part of the budget wish list get addressed by the government and the finance minister? We will know. All will be revealed here on the 23rd of July. So remember to tune in to CNBC-TV18, and we'll have Srini, Alok and Vikram back with us to decode the fine print of the budget after it is presented. But thanks very much, gentlemen, for taking us through what industry is hoping for, what the startup ecosystem wishes for from Budget 2024. We are going to take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment with more.